In the market, there are always a mix of people. Some who think the market is going to continue to move much higher, others who think the market is about to head much lower. That is normal. But it is not a good sign when the people who think the market is going much higher are small individual retail investors, and the people who think it's going lower are the rich insiders. And it's even more of a bad sign when those retail investors are buying at a record bullish pace and those insiders are selling at a record bearish pace. But that is exactly what is going on right now. Let me show you. So first, let's take a look at the performance of the S&P 500. It's been on an absolutely insane bull run ever since it bottomed in October of 2022. In fact, the market is up a staggering 65% since that point. Now, over that time, one group has become increasingly bullish, especially recently. If you take a look at this chart, what you are looking at is the bullish sentiment of small retail investors. If you've ever heard the term smart money and dumb money, that's where this comes from. That typically, the small individual retail investor does not have access to the same level of sophistication, the same level of information, or the same level of financial discipline. And therefore, when the average person is running into something, usually the insiders are doing the opposite. The big money, the institutional money, ones with more sophistication or discipline or higher levels of more accurate information, therefore called smart money. Doesn't mean that those people are actually dumb or smart, it's just where the terms come from. If you take a look at the zero line that runs across the middle, anytime you get above this, it means retail investors are more bullish on average than bearish, meaning they expect the market to go up. When the blue line is down below zero in this section, it means retail investors are more bearish and they expect the market to go down. Recently, over the past year and a half, you can see this insanely fast move from bearish sentiment to bullish sentiment by retail investors. The last time bullish sentiment was this high was before the great financial crisis in 2003, 2004. Real quick, I have an urgent announcement for you. If you've been on the fence recently about joining my private coaching program, this is a group where you're going to get access to my massive investment training library, as well as my flagship product, the Asymmetric Trade Alert, where you get asymmetric trades hand delivered to you, picked out and vetted by me personally. For Black Friday, I'm running a limited time sale. I'm offering $1,000 off your annual membership, and you get this for life. As long as you keep your membership, you keep the discounted rate if you sign up this weekend. I debated whether or not I was even gonna run a sale for Black Friday because the value that you get from this membership is worth every penny you pay for the full cost. But with everything that's been going on lately, from the dust settling on the election, the recent rally in Bitcoin, to even the growing potential for World War III, I believe this may be one of the best and most profitable times in history for people who know how to protect their downside risk while taking advantage of the tremendous upside potential on the horizon. And that is exactly what my program is designed to do. You'll get access to my flagship product, the Asymmetric Trade Report, my entire library of advanced investment training material, live monthly coaching calls with me, and much, much more. If you're wondering what other members are saying about the program, I just got this email a few days ago from Matt saying, "Thank you for my first 10-bagger. 1,175% gains to be exact." Or this email from Ray, he said, "I've made sufficient money from one trade to cover the cost of the entire year's subscription." Or this email from Thomas saying, "I just got renewed today for another year." Or this email from Daniel saying he was up $25,000 on one trade so far, already paid for 10 times the investment of the annual membership cost. So if that sounds like something you're interested in participating in, go ahead and click on the link in the description below. But remember, this deal for $1,000 off expires Sunday at midnight. So if you want to join, make sure you've signed up before then. Now, I need to make a note here. For the long-term investor, don't worry about this. This is not a long-term investor thing to worry about. As you can see, the retail investor bullishness peaked last time in early 2022. Coincidentally, that was right as the bear market in the S&P 500 was starting. This bear market ended towards the end of 2022, right as bearishness on the market by retail investors was reaching its peak. So retail investors, at least recently, have had it exactly opposite, being most bullish, having the most unrealistic expectations about the market moving up more, right when they should have been bearish and selling. And then they've been the opposite. Right when the market was bottoming, retail investors were thinking the market's only going to continue going down and they weren't buying. But look at the chart again. Let's say you had just thrown all your money into the market in December of 2021, you'd be sitting pretty right now. That's why I say don't be concerned about this if you're a long-term investor. If you're just dollar cost averaging, you're buying, maybe you're hedging, you're doing a little bit of trading, but the majority of your money, you've got a 5-year plus time horizon. This is not something for you to worry about. I'm not saying the sky is falling. For the short-term trader and for the person who wants to protect their portfolio from short-term drops, maybe make some money off of that, profit from it, this is something to pay attention to. Because what we are seeing right now is some of the most extreme bullish sentiment we've seen in over 2 decades. And considering the timing of this, it does not bode well for the short-term future of the stock market. But at the beginning of the video, I mentioned another group. This is not just about retail investors because let's be honest, if everybody had the same opinion, big money and small money alike, and we saw huge investment from insiders, well then maybe everybody's just right and all the buying might continue for a while. But we have one group that is doing the exact opposite right now, and that is insiders. If you take a look at this chart, you are seeing 2 things on the same chart. Number one, you are seeing the blue line, which is the price of the S&P 500. It's just the stock market you're seeing there. But you're also seeing a bar graph in pink, which shows for corporate executives, the insiders at these publicly traded stocks that are a part of the S&P 500, the ratio of sellers to buyers. As you can see here, there are certain times when this ratio of sellers to buyers is very low. Like we could see in about 08, 09, you could see the ratio of sellers to buyers was very, very low. A lot of buyers here on the inside. You can see at the bottom of the market in 2020, a lot of insider buying. You can see at the bottom of the bear market in the end of 2022, a lot of insider buying. Corporate executives, these are insiders. These are the closest people to the most accurate information about the value and the health of their companies. They tend to have a pretty good record on when they are buying large amounts of their own shares. As we saw for the last 20 years or so, every time buying from insiders got to an extreme level, it pretty much marked the bottom of the market. However, let's take a look at some of these spikes in sales when the ratio of sellers got to its extreme when insiders on average were all selling. We can see preceding the great financial crisis for a few years, we had some massive spikes in insider selling. Take a look here at the most recent reading on the chart. You can see that this pink bar goes up higher than even the last record, which preceded the bear market of 2022. In other words, insiders are selling at a very rapid pace right now. Now take a look at this chart. Last time insider selling got up to the levels that we are at right now, the market still went on a fantastic bull run for some time. And that is normal because right as the insiders are getting out, retail starts piling in, you get the bubble, the blow off top after that. As all of the retail money, there's a lot more retail money, starts to pile in and drive that thing high. Which means that if we are expecting something similar out of the S&P 500 this time around, we could expect to see a massive blow off before a bear market correction, just like we saw during 2022. And even though in hindsight, you might think that was no big deal, that was a 27% drawdown from top to bottom in under a year. Like I said, this is not something for the long-term investor to worry about. This is not something to drastically change your portfolio about. Members of my program, Heresy Financial University, I've never had them get out of their portfolios, never had them change their overall allocations based on short-term movements in the market. But from time to time, we do hedge. When there are signs like this and it shows massive risk of a blow off top and then a market crash, we want to play that so that we can not only protect our portfolio from that, but we can also make money from it. So if you're interested in that, go ahead and check it out. Link is in the description below. But if you're a long-term investor and you don't care, you're just throwing a couple dollars in every single time you get your paycheck and you've got 5, 10, 20 years before you're going to touch it, don't worry about it. And just because something happened one way in the past does not mean it's going to happen the same way in the future. So this time, insiders could be wrong and retail might be right. Who knows? As always, thanks so much for watching. Have a great day.